Thank you everyone for joining. I am Tim from NestMade Mortgage. Benson is our leader here and the owner of NestMade Mortgage. We are joined here today by Rachel. Rachel, the extraordinary. She is, probably I would describe Rachel as one of the realtors that really cares. We wouldn't do this with anybody. And she's a very close friend. The way I know Rachel is that she's a very close friend of Mimi's. And Mimi is our business developer and partner, life partner with Benson. And she's probably one of the smartest people I know. So if she chose you as a friend, I trust you. And that's how we became friends.
Honestly, thank
Yes,
you so much actually for inviting me for your first live. This is your first live, right?
this is. Yeah,
Oh
we're
my
branching out a
goodness,
little
so
bit for the
privileged.
live.
Oh my gosh,
Yeah,
thank you.
absolutely. Rachel has, gosh, I know Rachel, you've been doing this for so long. And the one I was saying when we first started this, and I want to catch up to people that are watching here now, is that a reason why I like you, because you just work with such a diverse number of people. I have a special place in my heart for those that work with special needs, because if you can work with special needs, you have a personality that can tolerate others. You know what I mean? Do you
I
ever
think
meet
so.
someone that can only work with certain people? You ever meet that person? Or
Yeah.
you can't, there's a certain friend of yours that they can't really have coffee with someone unless they, have a certain social status. That's what I like about you, Rachel, because you have a diverse clientele. Could you tell us again a little bit more about yourself? Tell us again about yourself.
Wow. Tell about myself. Okay. Well, other than well, first of all, I was born and raised in the Philippines. So I came here actually when I was already 25. And then from there, I got my degree in the Philippines and I went back to school here.
Yeah.
Got my IT degree here. And then from there, I started actually when I got here, probably 2 years to 3 years later, I started working for Regional Center and never left. And then with that, I went to school for IT and then real estate. And then that's what I've been doing. And like I said, I've been saying I'm gonna retire. I'm gonna retire for with Regional Center and just focus on real estate. I just cannot find the heart to just leave yet. I don't know why.
Aw.
It's just I'll meet a new family, I'll meet a new baby, and I'll say, okay,
Yeah.
I'll have her for 3 years, and I will. Then that's it. I'll transition into the school, and I'll be fine. I can go. Then I'll meet another family that I'll fall in love with, and I just can't. Now, 22 years later, I'm still there.
I love it. And for those, we just had a lot of people join right now.
Oh
So I'd
yeah!
like to,
Welcome
yeah, let me catch
everyone.
them up. This is a home buying session with me, Benson Pang's team, and with Rachel, our realtor extraordinaire. And Rachel is going to come up with a few. She has some really good questions, I was told.
Yes.
Really good questions,
Got
right, for me?
questions for you.
Yep. Yep. So I'm the lender and Rachel is the agent. And I say we just jump right into it. Go ahead,
Of
Rachel.
course.
Ask me a few questions and let's get started.
Definitely, definitely. Thank you so much. Thank you again for giving me this opportunity because I do have
Of course. Yeah.
of course, like I said, I actively work with buyers, aside from regional center, I work with sellers and buyers, and I am asked with, a lot of questions, but different questions from different people. So to put them
Yeah.
together, this is great that we can do this so that way everybody, hopefully, everyone will be here listening will benefit from all these questions.
Great.
Well, I'm going to start with the very first that always comes up, how much down payment do I need? How much down payment do I need to purchase a home? 20%. People ask me, do I really need 20%, 5%, 10%, zero? Maybe you can, enlighten
That's
us.
such a great question.
Mhm.
Yeah. Even that's a good question. You know why? Because I would say even the generation before mine, my own parents would have told me that you need 20% down. I really hope that most people know you need to know you don't need hundreds of thousands of dollars to buy a home. You can buy a home with as little as 3% down, sometimes 5% down. That's the minimum required. Now, if there are special circumstances where you may need to go a little more, but that's very, very rare. So always keep in mind that you don't need to buy with 20% down. There is a such thing as mortgage insurance, and mortgage insurance these days is so affordable. A lot of people, they're told to go 20% down because they want to avoid mortgage insurance entirely. I'd say yes, you should have avoided it if it was 5 years ago. Because 5 years ago, mortgage insurance was maybe $500 a month, $600 a month. These days, mortgage insurance is like $40 a month to $150 a month. It's a completely different ball game now. And the reason why mortgage insurance is so low is because there hasn't been any foreclosures in so long. Mortgage insurance companies has just been raking it in. They haven't really been paying out anything. And the competition is very fierce right now for mortgage insurance. So bottom line is, don't be scared of mortgage insurance. And 3 to 5% down is totally acceptable.
Very good, very good. Wow, there you go. Okay, next question. You know, that's really good, very informative. Thank you. Okay, so what is the benefit, if any, of using a private lender like NestMade versus banks like Chase, Bank of America?
Yeah. Gosh, I don't mean, it's like I'm trying to think where to start.
I know, right? Yeah, because yeah, definitely. I mean, because when people, I do refer private lenders, you know, to my clients because
Yeah.
the success that I have with the process, you know, for my clients, you know.
Yeah.
So they ask me, well, should I go to a bank or should I go to them? So maybe
Right.
you can tell them why, you know.
So let's just let's break down the experience, okay? Like if you go to Chase Bank, they can only give you Chase products. And it's such a limiting experience. And so if you want to apply a loan with Quicken Loans, you have to go, even if you've already been pre-approved with Chase, you have to go to Quicken Loans and redo the whole process. And then you might be pre-approved with 2 banks and get 2 banks products. With us, we're mortgage brokers, right? So we have the ability to send you to over 24 lenders, right? Depending on your situation, you might be eligible for up to 18 lenders that we can send you to with one loan application, getting your credit pulled one time, right? And
That's
yeah, exactly. And the thing is, you might be wondering, well, why would I come to you, a middleman, right? As opposed to going to the lender directly, because that might be worth it. Well, I'll tell you why is because we actually get a lower rate if you come to us than if you go to their retail department. Let me give you an example, right? Like Quicken Loans, okay? Or Wells Fargo. If you go with Quicken Loans, they will give you a higher rate than we would give you. And we would still send you to Quicken Loans. And the reason why that happens is because Quicken Loans, they do not want to be in the business of chasing down documents, closing on time, talking to agents, spending the millions of dollars that they spend on marketing. You know what Quicken Loans wants to do? They just want to be a bank. They just want to lend the money. So what we do is we do all the work for Quicken. We send the loan to Quicken in a nice, neat package. They lend the money and they're done with it. Because Chase and Bank of America, they're kind of realizing, and the big banks realized this a few years ago. They've been sending their business more and more to mortgage brokers because they're learning. They're learning, hey, we can't pick up the phone when the client is in the middle of an open house on a Sunday morning, having questions about monthly payments, right? We can't be picking up these calls from realtors that's calling us all the time. We can't pick up and we can't pre-approve a client who wants to make an offer on Wednesday night and the seller has a cutoff time at 9 p.m., which, you know, Rachel, that happens all the time, right?
yes.
So they're sending the business more to mortgage brokers. We live and breathe mortgages. We're like the private industry.
Yeah.
I like to make the analogy because both my mom and my dad, they work for the government. My mom for the federal government and my dad worked for the city of LA. And they would tell me it's slow. I would say the big banks is kind of like the government version of the mortgage industry. And we're like the private industry. We're much more efficient. We don't go home at 5 o'clock on the dot. If there's questions to be answered, We stay here. We love doing this. No one's forcing me to stay except for Benson, the owner. That's kidding. But
that's actually one of the good things. That's why I love working with direct lenders. I mean, private lenders like you guys, is because
yeah,
yes, I can text and call them anytime. Unlike a bank, if they're closed, they're closed.
yeah,
Can contact them basically. So
yep. That's kind of the real reality of purchases. You have to act really, really fast to get the property.
mhm.
And these days, you have to be so good at what you do to get the property for the borrower, for the client, because I feel bad sometimes when I meet people with maybe inexperienced agents, or they come to me in the middle of escrow saying that their lender couldn't do the job or they're not fast enough. Those are kind of hard stories to hear because it's so hard right now to get accepted, to get your offer accepted, that you would hate you want everything to be downhill after you get your offer accepted. You don't want your uphill battle to start after you get your offer accepted.
Okay, so saying that, I'm gonna add something to that. So, anyways, let's say for example, a client or a buyer's already in the middle of escrow,
Okay.
escrow, and like what you mentioned, they realize that they're not happy, with the lender that they chose, and
Okay.
they decided, you know what, I would rather. I realize I'm gonna go with NestMade. So, is that possible?
Yes.
Right?
Oh, totally
Is that
possible.
possible
Yeah.
to switch lender in
Honestly,
the middle of escrow?
I can tell you it's possible. It's not preferred. That's my honest truth. I won't say no to anyone who comes to my door, but if you tell me you have 10 days left on your escrow, to be honest, it's not much I can do. We can accept if you have if you are able to get an extension from the sellers, then we can get maybe another 10 days. Then yeah, it's definitely workable. I say there's always an answer and there's always options.
Sure.
Um, you want to try to avoid those situations as much as possible to set you up for success, right?
Of
You
course.
want an agent like you, Rachel, who's just amazing at negotiating. I really like how you fight for your clients,
Thank you.
and I mean, there's so many agents that like once they enter the escrow, it's kind of like they feel like the work is done. You ever meet someone like that?
Oh gosh, no.
It's
I mean, never. I was like,
yeah,
never, never.
right.
There's no such thing as 8 to 5 job in real estate.
No,
There's no such thing.
exactly. So I would say yes. I mean, come to me as soon as possible. If there's a problem, you want to come to us sooner than later so we can save this. If possible, just start off on the right foot from the beginning.
Of course. Luckily, that hasn't happened to me because, like you said, I've been fortunate that once they are set up or I've given them lender options that the one they chose they stick with them because they're good.
Right.
I was just
Good.
asked, probably that was just asked once, but never happened. So I thought I'd just throw in and ask you that question since somebody asked me about it.
Right. That's
Okay.
absolutely. Yeah.
Right. Okay. So are we ready for the next question?
I'm ready. Throw it at
All
me,
right.
girl.
Okay, here we go. What is the difference between a pre-qualification versus pre-approval?
Okay, that's a really big one because most people end up with pre-qualifications. And what is that? It's basically you have a relationship with a bank, right? You go into Bank of America, and you have, because of your relationship, you tell them you want to buy a $700,000 home. They might ask you for some tax returns, for some pay stubs, for a little bit of documents, and then they send you a pre-qualification letter. But then the problem is that they didn't really underwrite the loan is the problem, okay? A pre-qual is a surface level approval. A pre-approval letter is that you've actually you've been approved prior to the transaction, okay? That's what you want. You want a pre-approval. Here at NestMade Mortgage, we don't even do pre-qual letters. We only do pre-approval letters because we want to make sure that when you find a house, you can actually buy it. We want you making offers with confidence, right? Can you imagine if you had a loan officer just kind of briefly look over your tax returns, give you a pre-qual letter, and then you find the house you like, and it turns out you don't actually qualify for it? That's a
Yes.
nightmare. So with a pre-approval letter is truly what you want. You want someone who really understands the guidelines. You
Mhm.
want someone who actually digs through and reads every page of your credit report, which is not easy. And I can tell you right now, most people don't do that.
And that's why I
um,
try to explain to my buyers. And I'm speaking on the buyer side, and I'm
yeah,
gonna say something on the sellers, on the
sure.
sellers, of course. For the buyer side, and that's why I try to explain to them, it's very important to get the pre-approval prior to us going out and looking at homes, because
Yes.
I mean, maybe you can elaborate. Why is that? Why is it very important to have a pre-approval first before we even go out and fall in love in the house, and then not qualify and not be able to buy that particular house? So,
Right. Yes, that's really tough. And tell us how it is on the seller's end too.
oh yeah. So on the seller side, when I represent the seller, it is very important for the sellers to see that the buyers that they are getting, or the offers that they're getting from the buyers, they are pre-approved, meaning they are truly qualified to purchase a home.
Right.
Because if it is truly a pre-approval letter, that means the lender already checked everything, and you are really approved for that amount of money to purchase,
Right. And let me
right?
ask you a question. Yeah, I totally. So when you're a listing agent, right, do you get kind of nervous when you get an offer that comes in from a big bank, like from like a Chase loan officer? And only reason why I ask is because I hear so many times where they're just, if it's not a mortgage broker or someone who's like not the private industry, kind of like that analogy we made, right? It's like that non-government kind of private industry side of the mortgage. Do you get a little nervous when you get an offer that comes from like a big bank loan officer?
You know what, to be honest, because of what I've heard from other people's experience,
Yeah,
I'm kind of a little bit hesitant when I see. But of course, the decision is, it's up to the sellers, of course. However, from my experience, majority of the clients or the buyers that I've dealt with, they are working with, private lenders like you guys, instead of, I think I've dealt only, I can count on my fingers how many I've dealt with, like, who use banks like Chase or,
yeah,
Bank of America. But majority are like private lenders, like I said, because it was, for them, it's easier. It's easier to process also. And that particular one that I worked with a bank, there was a delay. There's a delay in process, and I don't know. I think they're stricter, and like you said, it just caused a delay in our process for some reason.
yeah.
But everyone that I worked with private lenders, everything just went by smooth, you know.
Great.
But I've heard success stories as well. So I
Sure.
I
Of
cannot,
course.
I cannot be biased about versus banks and private lenders, because like I said, there are success stories as well. So
Right. Absolutely. All right. Thank you so much.
yeah.
Should we do the next one?
Oh yes. Okay, let's see. Um so if, let's say, for example, because I know I still see this. I've heard this even prior to the pandemic, when the market got so crazy. Some buyers, some people would be like, I'm gonna get the pre-approval as soon as I find the house that I like. As soon as I find the house that I like, then I have the lender that I'm gonna go with. They can process it right away. How long does it take to get approval? Let's say I take a client, a buyer, to look at a house, they fall in love. Now we need to make an offer. How long does it take to get the pre-approval done?
You
If
know,
they wait.
the short answer is if you're just looking for pre-approval, it could just take a few hours. But the thing is that a lot of times pre-approvals need time to set up properly so that you can get the best results. So if you're looking for just a result, I could do it in a few hours. If you want the best results, you want to do it before you shop for a home. And the reason why I say that is, like, let's say this. We have clients coming in that have maybe 740 credit, right? 740 credit might sound fine, right? But what if I had more time to get your credit to 760, right? Okay, I need a little bit of time to do that, but if you've already found a house and the seller's already there and they're waiting for you to enter escrow, we're not going to have time to get you from 740 to 760 credit score, right? And And also, you want to know and understand the consequences of your offer too, right? What if you go into finding a $700,000 home and you realize the monthly payment is not comfortable for your family? Then you might have spent all this time shopping for a $700,000 home, and you kind of have an idea of what a $700,000 home feels like, and when you have an idea of what it looks like, right? But until you kind of sit down and you kind of be told and advised what the numbers would look like, you really don't know if you can afford those numbers, right?
That, yeah.
Yeah, and so I think if you were to get pre-approved, pre-approved is there's so much more than just a pre-approval. It's looking at your numbers, and also the agent will also pre-approve you with confidence too, or they'll shop around with you with confidence too, because it's really hard. I don't know any agent actually that will actually shop around with you and do a really good job for you if they haven't been told that you're pre-approved. Is that right, Rachel?
Yeah, that's actually the first question I always ask.
Oh,
Have you
yeah, right.
have you
Okay.
been pre-approved? Because they're like, everyone's like excited. I want to see this house. I'm like, have you been pre-approved? If not,
Right.
if we refer you, if you are not comfortable going with your with your personal, wherever you bank or whatever you go for
Yeah.
your finances, if you want referrals, then I give them, of course, my referrals, because I explained to them how important it is. Like I mentioned earlier, going out, not knowing exactly what you would qualify for, sometimes it's heartbreaking because they will see a house, they fall in love, and then they're not going to be able to buy it.
Yeah.
So then what? So that's why, in order
Right.
to eliminate that, the disappointment, let's get it done first. Let's get to the first step, and that's very important.
Yeah. Even beyond that too, not even the agent on the buyer's end, but do listing agents offer open houses to those that are not pre-approved? Do they open up their houses to people that are not pre-approved?
Well, open house, I mean, open house is open house. Anybody can come in, of
Right.
course.
But appointments, yeah.
But for what I'm seeing a lot, and as a listing agent, it depends on the seller, of course. If the seller requires that, you know what, I only want people who are truly qualified to come and see my home, then that's what I'm going to tell the buyer's
Right.
agents. I'm sorry, are your clients pre-approved? If they are not, I'm sorry, I need to see the pre-approval first before you can come and see my client's house.
Right.
So that's why it depends. I mean, the comfortability of my clients. But on the buyer side, I always explain to them, in order to have a successful, purchase and to look at property, and then really truly, if they are really ready, they are more than open to doing it anyway. So if they're truly ready and they really want to find and get the house they want, they will do it. So, and that's how
Perfect.
I kind
Love
of
it.
filter. That's how I kind of filter serious buyer, maybe 6 months or maybe a year. So.
Yeah.
Oh, speaking
Right.
of pre-approval,
Yeah.
how long is it good for? Because you know how it is with the market now. Everything goes so fast that, what if we don't find a house like this week, this month? How long is a pre-approval good for?
That's true. The reality of it these days is that sometimes buyers don't find a home for over a couple
Right.
months. Sometimes it takes some time.
Mhm.
I would say every company has their own policies. For us, I usually tell clients that, listen, if you have the same job, the same pay, if you didn't open any new credit cards, if you didn't buy a new car, if your debt stays identical and your income stays identical, I would consider yourself pre-approved indefinitely. I'm happy to update
Oh, that's
pre-approval
great.
letters.
That's good.
Yeah, but if you buy a new car or you buy yourself a new boat, maybe you finance some furniture or some jewelry, you need to get pre-approved again. Yeah, we
Okay.
need to do it all over again, which is fine.
Cool.
I usually advise and recommend people to hold off on those lavisher purchases, yeah, until after you bought the home. Yeah.
That was actually not on my list, but I'm just gonna jump in and ask you about that. So,
Yeah.
what if they're pre-approved, they're good to go, and all of a sudden, yeah, they, like you said, they made this big purchase, and then what happens when they submit an offer, and then you run the credit again, and you know could it be, you know, what are the repercussions of making a big purchase while you're in the middle of a purchase? Or, you know.
So a few things happen when you, let's say you finance a boat. They would have pulled your credit, right? So that would have hurt your credit just by nature of them pulling it. Now, as a mortgage professional, if I pull your credit 6 times in a row today, it only counts as one pull. But
Really?
if you end up getting, yep, but if you go around and you get financing from a boat, financing for a credit card, it's a very diverse set of financing. The credit bureaus see that as, they see that as potential for delinquency.
I
If
see.
you're all of a sudden shopping around for debt, they will ding your credit score to reflect that nature, right? They will ding your credit score to reflect that reality.
Okay.
Now, if you are getting your credit pulled just for mortgages, right? If I pull your credit today and I pull your credit in 30 days from now, it still counts as one pull, right?
Okay. What if another lender like you, like NestMade, pull the credit, and they,
Right.
you know, they're trying to check other lenders? Will that
The,
affect their credit if 3 or 4 or 5 different lenders pull their credit?
within a 45-day window, they are consolidated into one pool.
Ah, that's good to
Yeah.
know. There you
Yeah.
go.
That actually works out that way for some of the industries. Yeah. So if you're shopping for a boat, you can shop with 3 different boat lenders.
Okay, well, that's good to know. Within 45 days.
Yeah,
Okay.
exactly.
Okay, fantastic. Thank you so much. Okay, let's see. All right, so going back to the credit score, you know, if a buyer has poor credit score, can they still qualify for a loan?
Yes, they can. Now, it depends on how low and depends on why, right? So if they have a low credit score because they have recent bankruptcy, foreclosure, or short sale, then we have to kind of look a little deeper in the situation. But if we're talking about simple like delinquencies that they made 2 years ago
Mhm.
and they've been working their way back up,
Yeah.
there's lots of things we can do with that. Even if their
Mhm.
credit score is low now,
Mhm.
most of the time, 80% of the time, we can help them enhance that credit score.
Oh, fantastic.
Yeah, we can do that most of the time in-house, and if we do it in-house, we never charge a penny for that service. Or if it needs more professional expertise, we have people that we can trust that can help with that as well.
Well, that's good to know. That's also good information for me. Thank you.
Yeah, let me know if
Yay.
you don't need your credit repaired though. I know you.
Yeah, I hope not. I'm glad I don't. Okay, so let's see what's next. What is the difference between an FHA and conventional loan?
Okay, here's the thing about FHA loan, okay? FHA loan is the same product as it was, almost. It's pretty much the same product as when it came out 20, 30 years ago, okay? It's great. When it came out, it was the best program ever because it was the first program to offer such a low down payment of 3.5% down.
Mhm.
Back then, conventional loans required you to do 20% down. These days, conventional loans have gotten better and better and better in the last 3 years. You don't need to be forced to use an FHA loan to do a low down payment. The reason why I mention that is because FHA loans are kind of expensive loans. You want to stick with conventional if you can. FHA is more forgiving for low credit scores, and so that's why if you have a low credit score, the world opens up to you with an FHA loan.
Sure,
Mortgage insurance on FHA loans, the monthly payment is a little higher on an
sure.
FHA loan than a conventional.
Mhm.
Yeah, that's the main difference.
Okay.
Um,
So can you
yeah,
clarify again? So for a conventional loan, they can also um, put down lower down payment, not necessarily 20.
that's right. Yeah.
Oh.
Thanks for setting me up on that. I appreciate it. So yeah, conventional loans,
Mhm.
you can do actually, here's the surprising part. You can do 3% down on conventional loans. FHA requires you to do 3.5% down.
Okay.
So yeah. So if you can do a conventional loan, if you qualify for a conventional loan, we're gonna keep you on the conventional loan. That's kind of the vanilla product. That's the loan with the lowest fees and the best rates.
That's really amazing because there's a lot of misconception. You know, the people think like, No, because I don't have a lot of money for a down payment, so I don't want to pursue my purchasing a home now because I don't want an FHA loan because I don't want to
Yeah.
pay uh, extra fees and everything. But that's good to know that for a conventional loan that they can also get it for lower down payment. That's really amazing.
One thing about FHA loan is that it does come with a lot of fees.
Oh,
It's something that we can't
sure.
really control, and we like the product with less fees.
Sure. I know, right? I
Yeah.
know. FHA and conventional. This conversation is very broad and probably takes another time and day. But at least for the purpose of our listeners and myself, it's really great to know that because, like I said, people thought that if for conventional they really need 20%. So that's good to know that you don't have to.
Yeah.
In general, that's
Great. Tell
okay.
everybody.
Yeah. I hope everyone's listening here. Okay, so let's see. How much total closing costs does a buyer have to prepare for when they're purchasing a home?
Oh gosh, that's such a great question. Let's say it depends
Depends on the
because let's say,
size
yeah,
of the
let's
home.
say you buy a $500,000 home.
Okay.
Your total closing costs for escrow, title, and government fees can be expected to be around 6,500 for a $500,000 home. And the escrow and title companies, you won't meet until you actually go into escrow.
Mhm.
But because the seller usually picks those services, right, Rachel?
For the escrow,
For the escrow and title, yeah. And
well,
so, uh-huh.
it's usually like they pay their own. So the seller pay their own, the buyers pay their own escrow fees.
No, 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 you pay your
Oh,
own, but what I mean is that the seller usually picks who the escrow and title company are, who they
oh
are.
yes, 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 yes.
Right, okay. So they
Right.
pick the escrow title companies, and so you won't meet them now. You'll meet them when you open escrow. Yeah,
Right.
but you usually go half-half on it. I would say escrow, title, and government fees for like a $750,000 home will be somewhere around $8,000. And then if you want to include taxes and insurance with the transaction, which is optional, it will be on more on top of that too.
Of course.
So yeah, so whatever the down payment is that you choose to do, let's say 700,000, you take 5% of that, 35,000, right? Um, or it could be 10%, it could be 70,000, okay? Let's go with 5%, 35,000.
Yes.
And you add 8,000 on top of that, that's 43,000. That's what you need from start to finish for the entire transaction,
Yes.
all in.
Yeah, and that's what
Um,
because I tried to explain that to my buyers or potential buyers because they're asking, so, okay, well, I have the money for the down payment, but then I tell them, well, you do need to prepare for the closing cost fees as well. And so
right.
they want to know, well, how much more do I need to prepare for, basically?
Yep.
So, okay,
Exactly.
that's good to know. Let's see.
Yay.
Ooh, we're pretty good. We're halfway there.
Almost there.
I know. Okay, let's see. Well, are there programs like low down payment options or any assistance available for first-time home buyers right now?
Yes. So there are programs out there for down payment assistance. They are not ideal in a purchase situation though, because sellers do not accept, they're not accepting offers that's usually they don't accept offers that's more than 30 days. And with a down payment assistance program, you're at the mercy of a couple of government entities that will end up dragging your escrow on longer, about 45 to 60 days.
Hmm.
We definitely do that. So if you are in need of down payment assistance, you would do, but you're not going to want to do down payment assistance if you don't absolutely need it.
Okay,
The
sure,
down payment
sure.
assistance program, yeah, it does come at a cost. The down payment assistance is not a free down payment. It comes at an extra monthly payment cost, and you do have to pay that back.
All right,
Yeah, there
sure.
are a couple programs for it. COVID did kind of put those on pause for a little while, but they're back
Yeah.
now. They're
Okay.
back and they're better than ever. But I would say only do the down payment assistance if you truly have no choice but to do it.
Sure. Well, that's good to know also because yeah, there are still people asking about it, because
Yeah.
they truly want to purchase, and if they truly, like you said, if they truly need it, it's good to know that it's available. It's available.
It's available.
However,
Absolutely.
like you mentioned earlier, with the market right now, with things going fast, our sellers are getting a lot of offers from so many buyers right now. It's very competitive.
Yeah.
So I know it is unfortunate, but sometimes, I mean, sometimes if we get lucky, then yes, we get chosen, even with this type of programs. But
Yeah.
truly, at this time in this market, there's sellers are getting so many offers that this type probably of loan or loan for a buy
So,
is, it almost gets to the bottom.
yeah,
You know.
let's talk about that a little bit because um, I mean, Benson's been doing this for a really long time. And I've been doing this for as long as I've been doing this, every single year um, that I've been doing this with Benson with, it's like clients have been waiting to buy. There's always clients waiting to buy, like they're waiting for the market to cool down. And even if you bought just a year ago, you would be up so much in appreciation right now. But I truly have, Benson has a client who has been waiting since 2017 because I know in 2021, hindsight's 2020. But all the things that we're feeling now, we had those feelings 5 years ago too.
Yes.
Truly. And it happens every year. 2018, 2019, 2020. So many people, we go through so many people, and so many borrowers have always said they're waiting for the crash to come, including myself. I didn't buy any real estate either, and I really regret it. I didn't buy any rental properties, and I fell into that. And if I bought a property even a couple years ago, I would be doing so well right now. And
That's exactly what I tell my clients. Okay, so when they
yeah,
buy a house and they some of them may think, oh my goodness, I paid so much. Then I tell them, you know what, honestly, what you paid this year, if you sell your property next year, you're already ahead. You already
yeah,
have equity. Sell it tomorrow, you already have equity. If you
yeah,
close yesterday, you sell it tomorrow, you already have equity on your home. So you are not losing with
no,
buying, So again, it's another story. Like, what's better? Like renting, but paying someone your money every month versus owning. Yes, you're paying a mortgage and you get a tax break at the end of the year. And it's an investment.
right.
You gain equity, like you said. I mean, a lot of
Hmm.
my buyers have benefit from their property because now they have equity. They were able to pull money out, use that as what? Like probably to start a business or to help their children to purchase another home, their home, or just invest it on another property as an investment property. So there's so many benefits of having of owning a home right now. And I know it's competitive, but I work on the buyer side as well, and I've won, offers. I've got,
Yes, you did.
yeah, I've got, I've learned with this market, I've learned, some tricks and, how to win some offers, basically.
Tell
So
us a few about of those tricks that you use.
it depends.
Or are they
So
secret trades? We can't reveal them here.
they are not. So it's case by case. Okay. So of course, I mean, strong. I mean, just the recent one that I closed. We won because we're not the highest offer. We're thirty five
Okay.
thousand over. Okay, we're
Okay.
35,000 over.
Over the
We're not.
listed price.
I'm sorry. What?
You're $35,000 over the listed price, but you're
Correct.
not the highest offer that they've received.
Correct. And
Gotcha.
the reason why we got our offer is because my clients have according to the agent, according to the sellers and the agent, that my clients have the best down payment. Um, you know,
Oh,
yeah.
yeah.
So there are so many factors or so many things that sellers and buyers look at. So
Got
that's
it.
why that's why I say it's case by case. If you or someone come to me and said, okay, I'm ready to purchase a home, it's definitely, I need to sit down with them and definitely go over their finances and see where they're at, where they're at with their finances. What is their comfort with regards to offering a price, or what is your highest offer? What is your most comfortable price to offer? Basically, that's what's happening. It's like, what is your highest? What is your best
Right.
offer? Basically, give me your best, and I will try my best to make it happen for you. Basically,
Sounds good. All
yes,
right, let's
that's
go to
what
the
it
next question.
Yes. All right. So let's see. Are there? Let me see. Oh, okay. So are there restrictions with getting a loan to buy a second or investment property if we are doing a
Restrictions,
loan? Like,
you
let's say,
know, yeah.
yeah, let's say if I have, or a buyer already have a property, um,
Yeah.
a certain location, a certain city, like Irvine or something. Can
Hmm.
I buy another property in Irvine also and then rent it out?
Yes,
Okay.
absolutely.
So
Yeah,
there's
as
no.
an investment property, you can. Yeah, so two different things about a second home, otherwise sometimes known as a vacation home, and an investment property. The main difference are two things. It's down payment minimum. For a second home, you have to do at least 10% down. For an investment property, you have to do 25% down. 25% down is a lot. So it's kind of hard for a lot of people to do that. But the second home, so you might be thinking to yourself, why don't everyone just buy a home as a second home, right? It has to qualify as a second home. So remember, a second home is a vacation home. So if you live in the city of Irvine, right, you have to have your second home in another city that's not like Irvine, right? So if you buy a second home in Tustin, the lender is going to say, that's not really a vacation home, right? You need to buy, yeah, but if you bought a second home by the beach in Marina Del Rey, hey, that's pretty reasonable, you know?
Okay.
Irvine doesn't really have the beach. It's not literally, but if you
Sure,
buy a
sure.
beachfront property in
Mhm.
Marina Del Rey, or you buy a house in the mountains, or you buy a house in Scottsdale, Arizona,
Mhm.
right? That could be considered a vacation home. It
Mhm.
has to have the distance is a factor. It's not the main factor. The main factor is the comparison of amenities between your city and the next. Because like something like Palm Springs has completely different amenities. Actually, I would say Scottsdale is much more similar. They're not identical in any way. But if we were to say which one's more similar, Palm Springs or Scottsdale when comparing to Irvine, I would say Scottsdale, even though Scottsdale is further, right? All of this is under underwriter discretion. You
Wow.
want to pick a city with much different amenities than the city that you're living in. Now, investment properties, if you can do 25% down, you can actually buy anywhere you want. If you qualify for the mortgage and you can do 25% down, you can buy anywhere you want.
Perfect. This is really good information. Thank you. Okay,
Yeah,
I like
absolutely.
good information for me, for myself. Okay. All right. So,
Good.
let's see. Okay, when is a good time to refinance? I have people asking me that question. When is a good time to refinance their loan?
So the refinance is really about the numbers. And I would say most people probably wouldn't be able to do the numbers themselves. They really need a loan professional to show you how much money you can save with the current rates, right? Sometimes, a lot of times, refinances are free. And so it's really worth it to just kind of check in with a mortgage professional every now and then to kind of see where are the rates at. Can I refinance? Is it worth it for me to refinance? And if you have a good mortgage professional, they should be able to calculate those numbers for you within a day. It's not that hard. And you can even, we can, usually here I try to show the client on how to calculate the numbers a little bit so you can kind of get a feel for how you're saving the money. To a typical refinance, you should be saving tens of thousands of dollars during the course of a 30-year loan. It's really that much.
Very good. Wow. Okay, I'm almost done with my questions here.
Oh wow, okay, good.
Yeah,
This is fun. I don't want this to end. I mean,
me too.
we should have made this a 5 hour session. That's what I want. You have time, right, Rachel? You can do
Are
this
we
until
getting any
11.
questions? Are we getting
Um,
questions?
we have a question. Jeffrey. Hey Jeff, good to see you. How are you doing? Okay, Jeff has a great question. He asks, why does down payment matter to the seller? Okay, the answer is it shouldn't. That's the true answer. It should not. But the reality is that real estate agents, okay, most real estate agents these days have been mentored by a real estate agent before them that's a higher generation. The higher generation of real estate agents, they're not really that up to date with financing. If you have a 50% down payment on a loan, let's say, no, let's make it more realistic, okay? Let's make it more realistic. Let's say a 15% down versus a 20% down loan, okay? Essentially, a lot of listing agents will actually see the 20% down as a stronger loan, but there's no correlation between between the success rate of a 20% down loan and a 15% down loan. It's actually a myth between listing agents. So it's actually so unfortunate that listing agents really actually depend on that. But with that said, because with loans, if you're trying to qualify for a loan, your numbers, that what can achieve and overcome the loan is just income and credit. It's just income and credit. And so sellers, that's one, right? The second thing is that one benefit though is that if they see you're doing 20% down, they know that this is the other side of it, is that they know that you have enough money to make up the difference between the purchase price and the appraisal. That's the most important one, because with how high purchase prices are becoming, your appraised value might be $20,000 lower, $30,000 lower than your purchase than the purchase price, than the contract price. And if you have 20% down, they know that you can use some of that money for the difference. But if you're doing a low down payment, they might get the impression that you can't make up the difference. Now, the way to fight that is to provide, so you have a good agent like Rachel, she will show the proof of funds. You're doing 5% down, but hey, we have more than 5% down. We could do 10% down if we want, but we're smart. We're saving the other 5% down to make up the difference between the purchase price and the appraisal. So if there's any problems, my borrower is ready to go.
Yeah, great answer. And that's exactly what's happening. You mentioned about this, that the sellers, because in their mind is, yeah, they're thinking it's stronger because they have more funds. You know, they see that, okay, this buyer, this potential buyer, have more, you know, has more capability basically of purchasing, because it looks in their eyes, it looks stronger, that they have
Right.
more money. Basically, that's what they're thinking. You know, because as a seller,
Exactly.
you would not want in the middle of escrow or towards the end of escrow that they decide, you know, oh, sorry, I mean, they cannot move forward because the loan is not going to fund, or they don't have enough money to move forward. So that's why
Exactly.
it does make a difference for some sellers to see, yeah, the proof of funds, if there's enough money or more than enough money there in their account, and also having a stronger down payment, which is what happened to the other one that the recent one,
Right.
is because of that reason. What are
Great.
the rates right now?
Gosh,
Where are we at with the rates?
yeah. So after the Feds had their meeting last Wednesday, rates did start to tick up a little bit, but rates are still so low. You could still get a rate that's in the high twos.
That's
Um,
still great.
yeah,
What's the,
I
what
that
are
was
a lot of,
that
like,
was a
how
very
long?
envious
Oh my
sigh.
gosh, we're so spoiled. Like, really, from 6, 5, 4, now 2. I'm like, really? It's still great.
Yeah.
Oh, that's
Even I
good.
mean even I'm refinancing my own home. It's
See?
like we just have to, because I think right now is really the time to get in, only because especially with the Fed's meeting last week, rates are going to continue to go up.
Like
And you
how
know this,
high
like,
is up?
oh, like, 50% interest rate, not a big deal, No, just kidding.
That's so
No,
bad. Oh my
it's
gosh.
going to be
Okay.
ticking up a little more. It's not something that has been decided, and they can't decide. It's something that they have to decide when the time comes. And they're not going to increase the rate, in big chunks. They have
Sure.
to do it a little bit at a time, a little bit at a time. Yeah, they can't shock the market with like a
No.
1% rate increase, right?
So
Yeah. So it'll
buyers, do not be scared. Yeah. It's still
exactly.
good. It's still good to buy. Yeah.
It's still, oh my gosh. I mean, if you were to buy something right now, even if the purchase price might be a little higher, but you keep in mind that happens every year, right? Every year the purchase price is a little higher, right? You're still right now, you'll be saving tens of thousands of dollars because your financing fees are lower, right? With the rate being lower, the amount you pay in interest is almost nothing compared to what rates were just a couple of years ago.
Sure. Yeah. And for sellers, like you said, I mean, with so many programs available, and I mean, lending, it's like it's so much stronger now that's why I'm encouraging sellers. Like, if you truly want to sell, this is this is a great time to sell right now. Like,
Yes. Um, I
you
think
have
people are
other
getting top dollar right now for their homes,
for sure,
actually.
for sure. Yeah, definitely.
It's really fierce right now. Gosh, I mean, like, I think everybody has a story about somebody that they heard who sold their home for just an incredible amount, that more than they ever dreamed of.
Yeah.
Um, I would
Well, I think
say,
I
yeah,
think also if your goal is to stay in the house, or to live in the house for many many years, I think it's worth it, what you're paying for, because you're going to stay there for a long time anyway. But
right. Mhm.
if your goal is to only stay there for like 3 years, or and then eventually sell it again or move somewhere, then maybe
That's tough.
buying at the top price right now may not be
Yeah,
ideal. But if it is going to be a long-term home, then you know what? I always say there's no reason to wait if you're going to live there for a
right,
long time anyway, because the market, it's not going to change drastically. It's not going to drop. It's not going to, the prices are not going to drop. Just like,
right,
it's not like 2008 for sure.
right.
It's not going to happen. So I always tell buyers, like, if you truly are, your goal is to buy a home and live there for a long time, don't wait. Just because
Right.
it's not going to change, and the
Sure.
interest rate is still so good that take advantage.
Rachel, I'm so happy you're here with us today. Benson actually put in the chat that he loves you and he loves me. Aw.
Thank you. Love you guys too. Love you, Mimi. Yeah. Do we have any more questions?
I think Benson had just asked a question. He says, "What is that one thing you want first-time home buyers?" Rachel, why don't you take this one? What is the one thing that you want first-time home buyers who just started looking? What's a takeaway that we can give them?
Well, for first-time home buyers, I mean, in the beginning of the process, I always tell them, make sure that definitely get your pre-approval ready.
Yeah,
Take care of your credit. If you can build your credit score, it's very important. um, you know I always say, I know this is probably the lender side also. It's like, I've heard some lenders saying, using credit cards or making purchases, if you can minimize the use, or if you use, at least keep it to like at least 30% to
yeah,
50% usage, right? Of the
that's
credit
true.
cards, to
Yeah,
help build your credit score before purchasing, and then save up some money.
that's excellent advice. I like it. That was the right answer. Yeah. And are you sure you're not a lender?
I think just because I talk to you guys too much. I talk to
That's
Mimi
why.
a lot, and to Benson.
We're gonna hire you soon. Benson's gonna reach out to you very soon.
Thanks.
Mimi has a question.
Yes.
Hi, Mimi. She says, Miss Mimi Lynn says, if it's my first time buying a rental property, can I use the proposed income to help me qualify? The answer is most of the time is if it's your first time, we can use it. Yes, we can use it to cancel out its own payment. So if your principal, interest, taxes, and insurance, those are all the monthly payment expenses for a home, right? Principal, interest, taxes, insurance, right? Let's say it's $4,000, and your income is expected to be $3,000. It can cancel each other out. That's if you have a housing expense, okay? It gets a little wonky there a little bit. If you're living rent-free with your parents, the answer is no, you can't. If you're paying rent and we can prove that you're paying rent, the answer is yes. We can absolutely use it. And I think for most people, we can say the general rule of thumb, yes, you can use the future income of your investment property to help you qualify to purchase property. Did that make sense, Rachel?
Yeah, that's good to know. Actually, I want to add, how many investment property can one buy?
Just one. Yeah, no, I'm just kidding. You really can buy as many as you want, you know.
Really?
You can buy 25 and be like a little mini Donald Trump, you know, but you can be your own real estate mogul, you buy as many as you want. Now, how many you finance, how many stay financed with Fannie Mae, which is the ultimate purchaser of your mortgage, okay? Fannie Mae, it's like around 10. I think most people, I don't know, if you're lucky enough to have 10 finance investment properties, you're doing a good job.
I see. Yeah, because I see, a few people who have several properties, and I'm wondering, how did they do that? How can one couple or one family have several rental properties?
They leverage. Yeah, they buy investment property. It appreciates, like we know real estate will do. They do a cash out refinance.
There you
and
go.
They use it for a down payment for another investment property. And then over time, both of those appreciate again. They do cash out, they buy more. Now, when you do a cash out refinance, you're not allowed to over leverage. So you're only allowed to take out a little bit, but it's just enough to buy your next investment property.
Very good. Oh, there you go. That answers my question. Very good.
Yeah.
And I went through all my questions. So
Rachel, so amazing to be with you. You're the best. We love being with you. We're going to put your information down in the comments. If you're in need of a real estate agent, have a chat with Rachel. Just have a chat. Contact her. We're going to put her email address and her phone number in there. And I don't think you be disappointed. Rachel's one of the best people I know.
Thank you.
And yeah, absolutely. And if you need a mortgage and refinance, contact Benson's office on NestMade Mortgage. You're at our Instagram already. If you want to find our website, you can find it in the bio. And Rachel, you're amazing.
And for everyone who's listening, yes, I'm very comfortable and very confident in using NestMade, because like I said, anytime I need to reach them, they are there anytime. There's no such thing as 8 to 5. That's why I love them. They're always available when I need them. And definitely they're very workable, and they take care of my clients. That's why I love NestMade. So
love you, Rachel. Shout out to you. Hi, Bonnie. Okay. Sorry, that was someone who commented.
Oh, okay.
All right.
There's someone who asked what areas. I lost the question. What areas?
Oh, you're getting questions on your end too? I didn't see that. Maybe they're just sending it to you.
Okay, I kind of lost. I kind of saw what areas do I cover, something like that, I think. Well, I am in Orange County. However, I sold properties everywhere. LA, Palm Springs, San Diego. So I can be anywhere. I can go anywhere. So.
Oh, I love flexible agents. That's really good to hear. Some agents really only work in certain areas. Yeah.
And I understand that. I respect,
I do too. Yeah, it's tough.
To do that. But like I said, majority of my clients anyway are referred by friends and family, and and that's how and that I love that, because that means they trust me, and so that's why I choose to work with those people, because of that reason.
Right.
Yeah.
All right.
Hey,
Thanks so
we
much,
made it! We
Rachel.
did
We did
it!
it. Our first IG live.
Yay! Thank you, everyone. I hope this is helpful, and I hope this is informative for everyone also. And yeah, if you have any other questions for a lender, you can always reach out to me, and I'll definitely give you Tim or Benson's information. And hopefully I can connect everyone.
Thanks, you guys. Thanks so much, Rachel. See you
Hey.
guys.